Just over 2 weeks ago, we stood here together and dissected the real reason Apple's stock fell after its big iPhone 17 event. We looked past the simple sell the news narrative and focused on the market's deep-seated anxiety about Apple's AI strategy. But then, something happened. Something Wall Street didn't see coming. After plummeting, Apple's stock didn't just stabilize. It ignited. It surged with such force that it erased all of its losses for the entire year of 2025 in a matter of days. So, what on earth is going on? Was our analysis wrong? Was Wall Street wrong? Or is there a deeper truth hidden in this violent rebound? Stick with me, because today we are doing a full Apple stock rebound analysis to uncover what the market is really telling us. We're going to tackle the big fear around market share head-on, and by the end of this video, you'll have a much clearer picture of whether Apple stock is a genuine buy right now, or if this is just a temporary illusion. Let's get into it. In a world of financial noise, let's find the signal. Welcome to Smart Money Sense. All right, let's start by looking at the story the charts are telling us. On September 9th, post-event, the stock dropped from around $257 to a support level near $226. The headlines were clear: Wall Street underwhelmed, AI fears confirmed. It seemed our thesis was playing out in real time. But then, starting around September 19th, the narrative completely flipped. An explosive move confirmed by massive buying volume sent the stock rocketing back up, smashing through its previous highs. This wasn't a slow recovery, it was a statement. The surface-level reasons were quickly reported. Stronger than expected pre-order demand for the new iPhone 17 lineup. Shipping times for the high-end Pro models were extending, a classic signal that demand is outstripping initial supply. Bullish analyst notes started flooding in, with price targets being revised upwards. But if you are part of the Smart Money Sense community, you know we don't just settle for the headlines. And I know from our last video that you are interested in the deep analysis. So let's ask the critical question: does this rebound invalidate the serious concerns about Apple's AI strategy and its place in the tech world? To answer that, we need to break this down. First, we need to deconstruct the nature of this iPhone 17 demand. The narrative is that demand is strong. But what does that actually mean? The key insight here is where the demand is coming from. Reports indicate that the most expensive models, the iPhone 17 Pro and Pro Max, are seeing the longest wait times. This is incredibly significant. It tells us that Apple's core customer base, the loyal, locked-in users with high disposable income, are upgrading regardless of the incremental software features. They are buying the hardware. They're buying the new thinner design, the better camera, the faster chip. They are buying the status in the ecosystem they're already a part of. This suggests that for a huge portion of its base, Apple doesn't need to have the best AI right now. It has a moat. A fortress built over a decade and a half, fortified by iMessage, the App Store, iCloud, and those little blue bubbles. The rebound isn't the market suddenly falling in love with Apple's AI. It's the market waking up and remembering the raw, brute force power of this ecosystem. And before we move on to the next crucial point, if you're finding this level of analysis valuable, do me a small favor and hit that like button. It takes you 1 second, but it tells the YouTube algorithm that this is a serious financial discussion, not just another news report. It helps our community of smart investors find this content, and I'd really appreciate it. Now let's talk about the big fear that keeps coming up. One of the search terms that brought many of you to my last video was Apple market share down. This is a huge point of anxiety for investors, and it's a valid concern on the surface. Yes, in terms of global units shipped, Android is the dominant operating system. Competitors in China are gaining ground. These are facts. But a proper Apple stock rebound analysis forces us to look at market share differently. Apple has never played the game of highest volume. They play the game of highest value. Think about it this way. Apple has less than 30% of the global smartphone market share by units, but it consistently captures over 80% of the industry's profits. Let me say that again. Over 80% of all profits made from smartphones worldwide go to Apple. So when we see this strong demand for the most expensive iPhone 17 models, It's a confirmation of this exact strategy. Apple is happy to concede the low end of the market to its competitors because it absolutely dominates the premium, high-margin end. The rebound is Wall Street reaffirming that this business model is not only intact, but it's thriving. The fear of losing market share is a red herring if you're only counting units. The number that matters is the 2 billion active devices in their ecosystem. 2 billion. Each of those is a potential customer for services, for AirPods, for an Apple Watch, for high-margin software from the App Store. That number isn't shrinking, and that is why the stock rebounded. It wasn't about the iPhone 17 in isolation, it was a vote of confidence in the entire fortress. This is the kind of nuanced analysis we strive for here. It's not just about the numbers, it's about understanding the story behind them. And speaking of which, we're about to get into the most important part of this discussion. What this all means for Apple's future and whether it's a buy today, so don't go anywhere. Okay, so the ecosystem is strong. But let's not ignore the elephant in the room. Artificial intelligence. In our last video, we identified this as the primary source of investor anxiety, and that anxiety has not magically disappeared. Apple Intelligence, as presented, still feels a generation behind what Google and Microsoft are doing. The most advanced features are still slated for 2026. The rebound doesn't change that. So how do we reconcile these two things? A powerful rebound and a persistent, undeniable strategic weakness? This is the crux of a sophisticated Apple stock rebound analysis. The market is making a short-term bet versus a long-term one. In the short term, the market is saying, the ecosystem is so strong and iPhone sales are so robust, we are willing to overlook the AI gap for the next 12 to 18 months. The profits from this iPhone cycle are real, they are tangible, and they will be on the balance sheet next quarter. AI's potential profits are still theoretical. The market is choosing a bird in the hand over two in the bush. However, this is where the risk remains, and it's why you need to be paying attention. This rebound buys Apple time. It gives them another year of massive cash flow to pour into their AI research and development. But the clock is ticking. The long-term bull case for Apple requires them to eventually integrate cutting-edge AI seamlessly into their ecosystem. If, by the time the iPhone 18 or 19 rolls around, they are still perceived as lagging, the market's patience will run out. The strong ecosystem argument will begin to crack if the user experience on a Samsung phone becomes demonstrably smarter and more helpful. So the rebound is a vote of confidence, but it is a conditional one. The market is saying, okay, Apple, you've proven the strength of your fortress. Now use the time and money we are giving you to solve your AI problem. If this is your first time here and you want to stay ahead of these long-term strategic shifts in the market, now would be a great time to hit that subscribe button and join our community. We go beyond the daily news to connect the dots. We still have the final verdict to get to, so stick around. This brings us to the final and most important question. After this massive run-up, is Apple stock a buy in late 2025? Let's look at the data. After the rebound, Apple is trading at a forward price-to-earnings ratio of around 30. This is not cheap. It's more expensive than Google, and it prices in a significant amount of optimism. So here's my Apple stock rebound analysis verdict, broken down into two parts for two types of investors. For the short-term momentum trader, the trend is your friend, and the trend is currently screaming upwards. The positive news cycle around iPhone demand could carry the stock higher in the coming weeks. However, it's trading near its all-time highs, and buying at the peak is always a risky proposition. A lot of the good news is now priced in. For the long-term investor, which is what we focus on at Smart Money Sense, the question is more complex. Buying Apple today is a bet on two things. One, the continued dominance and monetization of its hardware ecosystem. This rebound shows that bet is still very safe. Two, Apple's ability to close the AI gap within the next 24 months. This is the riskier part of the equation. Therefore, my perspective is one of cautious optimism. The rebound was fundamentally justified by the strength of the ecosystem. It proved that the bear case was overstated. However, the current price leaves little room for error. A long-term position in Apple is still one of the cornerstones of a tech portfolio, but I would not be chasing the stock at these all-time highs. For new investors, a better strategy might be to wait for a pullback. Markets are volatile. There will be another moment of doubt, another piece of bad news, and that will likely present a more attractive entry point. For those who already own it, this rebound is a fantastic affirmation of your thesis, but it's also a time to reevaluate your position size and ensure you're comfortable with the valuation. Ultimately, the market didn't get it wrong, and it didn't get it right. It had a moment of panic, focusing on a long-term risk, AI, and then it had a moment of euphoria, remembering a short-term reality, the powerful ecosystem. The truth, as always, lies somewhere in the middle. So that's the clarity behind the great Apple rebound of 2025. It's a fascinating story of market psychology, business strategy, and the difference between short-term noise and long-term signals. Now, you have a clearer picture of the situation. But I want to know what you think. What's your take on this Apple stock rebound analysis? Do you think the AI risk is overblown? Are you buying, selling, or holding? Leave a comment below with your biggest question or takeaway. I read and respond to as many as I can. And if you're ready for the next topic, I've linked a playlist of my other deep dive analyses right here. Subscribe to join the conversation. See you in the comments.